another question that I'm happy to learn from. But we at HIVA have been supporting, for at least for the last 10 years, a cadre of creative fashion designers who are creating brands that are selling not only in their countries, in the region, but are attempting to export in Kenya, in Tanzania, in Uganda, in Rwanda, and some in Ethiopia. And most of these are selling to the emerging middle class, because this middle class are able to either buy new garments, garments that are designed, and garments that are placed in strategic retail spaces as lifestyle products. So I think a part of that 31 billion that is not in the fast fashion cut, trim, and make conduit is retained locally, and I'm looking forward to hearing more from my colleagues on what part of that they're interested in. Thank you.
Thank you so much, George, and to the beautiful women in the room. Lauren, thank you so much, Lauren, for taking time out to join us today. It really means a lot to us because I know that you're recently bereaved, and yes, so our condolences again. Thank you for taking time out.
No, thank you very much. And the reason why, despite the fact that my mother just recently passed away, I really wanted to attend that panel because to me it serves the cause. The fact that we actually have that discussion today shows that there is an opportunity to really drag financial resources to our fashion industry to make it a very profitable industry. So thank you for having me, especially as Biriman is a new venture. You know, we were not existing 6 months ago, and I didn't know all of you. So it's my great pleasure and honor to be with you today. So to try to address your question, I think I will actually concur to Chid's points and comments in the sense that I don't really believe that there is today a 31 billion USD industry. However, I think that there is a 31 billion affluence industry in the sense that on our continent, we are actually witnessing the most important increase and growth of the number of people, of the number of affluent people, so high net worth individuals. And I think what's really at stake in this industry is to drag that affluent people into consuming our local and African fashion brands. The issue is, today, we are used to actually consume luxury goods externally. And as she said, the same goes for Paris. You know, when you go to the airport, all the terminal where flights to go to Africa are the terminal where you have most of the luxury brands, Hermes, Chanel, Dior, and so on and so forth. So I really think that what is really at stake for us is to strengthen our industry, to strengthen our brands, to make sure that they deliver and they meet the expectation in terms of standards and quality when it comes to luxury goods, because that's really what is at stake. If we want to have a profitable, solid, and sustainable, we need to invest in our designers and brands to become luxury creatives and goods. And this goes through what George mentioned, in the sense that we need to strengthen production capabilities, we need to strengthen distribution, we need to make sure that in terms of quality, we meet those expectations. So as far as we're concerned at Birimian, that's the reason why we have just launched an accelerator program with the French Fashion Institute, and we've actually welcomed 10 brands that will go through a 10-month program during which we will have access to capacity building. We will strengthen their production capacities. We'll give them access to an ecosystem. And we think that exposing without strengthening might be very destructive for the industry. So this is where our approach and our signature is really strengthening capacity building, and transforming designers into creative entrepreneurs. So fostering creative entrepreneurship in our fashion industry. So sorry to having that long. the question was a good point for me to raise the point about what is Africa. I mean, what is our definition of luxury? Because I think it's another topic, and also an opportunity for me to address and strengthen the importance to strengthen the capacities of our industry and of our designers. Thanks, Omoyemi, for having me.
Thank you. Thank you so much, Doreen. Roberta.
Well, thank you, Omoyemi, and I would like to use this opportunity and platform to also congratulate you for your contribution to the fashion industry. I mean, we've known each other for almost a decade now and have worked together, and I know it's not easy, especially when the funding aspect is not in line, and I know how hard you've worked to really position Lagos Fashion Week. And also like to extend my sincere condolences, Lauren, to the passing of your mom. But just to address, can you hear me? Because I think there's a little bit of an echo. Can you guys hear me? All right. Okay.
We can hear you.
So to address what we have done, about this $31 billion industry, because there are two things. I have a two-pronged approach to this question. Number one, are we talking about the local manufacturing and local fashion design, or are we talking about the amount that is also coming in, which is also like a sustainability issue in terms of secondhand clothing? Because there are two issues that we need to find a solution to, and we cannot do one without the other. So what we have done over the past decade, so African Fashion Foundation, which is a nonprofit organization, I set it up 10 years ago because I was giving the opportunity to see, the creative industries as an opportunity for sustainable development. While I was still working at the United Nations, I decided to set up a foundation to address some of the challenges that I believe the industry had. And one of the key challenges was education, right, and capacity building. So we started first by providing the platform for educating African designers. And we worked with Lagos Fashion and Design Week on the first ever fellowship program with Kenneth Ise, who was placed with LVMH for 6 months, because we believe that one of the key things that we're missing in the industry was apprenticeship. Because if you look at the established luxury market, like your Dior's, your Chanel's, a lot of these designers work with an established brand and then move on to start their own business, maybe 20 years down the line. Let's even give an example of Karl Lagerfeld. He worked as the design creative director for Chanel before he started his own brand. So there's a level of training that they go through the apprenticeship period. So we realized that in Africa, everybody was a designer, and the focus was on the fashion designer and not necessarily on, the different aspects of the fashion industry and the different aspects that actually make businesses successful, right? So we needed to address that by giving the exposure to the African designer to actually sit with an established brand just to see how things are done. So brands then came back to the continent and had a very different perspective on how to handle their business. And then through that, we also realized that even when they came back, so it's really like a storytelling, and this is something we've done for a decade. So we saw, firsthand, using our own money and our own resources, the challenges, the gaps, and the vulnerabilities, and where we needed to hone in and find solutions. And it was a really, I would say that it was a learning curve for me because I'm not from the fashion industry. I have a development background and I'm a scientist by education. So my approach was more strategic in terms of like, how do we find a solution? So more of a problem solving strategy. We realized that funding was also an issue, right? And then, so you have the capacity to build in the education, the lack of skills, training and development, and then funding, and then the lack of infrastructure, lack of raw materials. So we wanted to find a way to address some of these challenges. So we started introducing grant scheme. So designers would tap into the African Fashion Foundation's grant scheme to basically do, we would support with like a showroom, let's say for 3 months, so that they can meet with buyers. We would support them in launching their collection. So we're doing all of these things with our own resources. 10 years down the line, we spent $1.7 million of our own funds to really, really support the industry. And some of the designers that we've worked with have become the major fashion designers on the global scene now. So we realize that the potential exists, right? The creativity is in abundance, but it's the opportunity and the funding that was lacking. And I didn't want to start by just problem solving with a fund. Like Lauren said earlier, throwing money at the situation without building the infrastructure is a futile journey. So we wanted to be part of building that infrastructure and piecing up the fragmented nature, things like intellectual property education, and trying to find a solution to that before funding. Now we are at the Impact Fund for African Creatives, which has been a work in progress.
So Roberta, you're telling us that your Africa's, $31 billion industry lies within the creative ecosystem? Because
I say so. Yes.
Okay.
Yes.
Great.
Yeah. So anyway, I'll continue. I guess we will.
No, continue, because the next question is what you're talking about. How you're restoring hope in the minds of creatives, on the continent with the work that you're doing. So please continue. Because you were talking so passionately about it. So I'm like, Roberta is taking us down that, this is where the money is at.
Yeah.
So
yeah. So the reason
continue.
why the money is in the creative and culture industries of Africa, I look at it for reasons. Number one is the creative economy tends to be the highest employer of women, right? So if you're talking about women, fashion industry, and not just the fashion designer, but the entire gamut of the industry. So this entire supply chain tends to, even looking at artisanship, beadwork, sewing, tailor, women tend to be the highest, in terms of from gender perspective, women tend to be employed by the creative economy. And the second is the young people, because Africa is the youngest population globally. We have a population of 65% under the age of 25. So if we're looking at an avenue to create jobs, we have to target for young people on the continent. We can use creative economy as an opportunity to really harness that young, innovative talent. The third is our culture and identity as a people, right? And now, especially during COVID, we've become more sensitive as Africans about our identity. We're looking, a lot of these big international platforms are even creating avenues for diversity and inclusivity. We are not going to be left out of the conversation anymore. We want to protect our own IP as Africans. And we want to project that in a way to position it globally to make revenue for the continent. So identity is key in all of this. And sustainability is what I was referring to earlier, that we need to create a way to look at the environmental sustainability aspect of fashion industry, fashion waste. Why are we importing secondhand clothing when we can impose tariffs to actually divert some of those resources to actually empower and support the local fashion industry? So these are the 4 reasons why I started IFAC. And it's purely from an economic development standpoint and really harnessing on the potential of the young people to actually get us to that 31 billion and beyond.
Thank you. And I look forward to, seeing how IFAC takes, IFAC brings all of this to life, because like you, I've also watched AFS since inception, and so I'm here for the long run to see how this evolves since the days, I think, of supporting Kenneth Eze and some of those other brands who are doing well today. Lauren, you've also touched on your vision for Berimian. Is that how to pronounce it?
Berimian, it's a mix of French and English.
Berimian, okay, great. Yeah, you've touched on your vision. Can you expatiate a little bit on it? Tell us a bit more about why you're so passionate about it, and why you think it's the way to go, and maybe you'll, just to, because I know that creatives have struggled a lot, in terms of where to find alternative sources of funding. So to be able to have all of you, here with us today to share this, it'll be great to listen to you talk about this beyond us reading about it.
No, absolutely. We're all passionate about the power and high potential potential that the industry has to offer, really. And I think, to me, as far as it started, when I went to Rue du Faubourg Saint-Honoré at Christian Dior, and I bought a skirt which was made in Côte d'Ivoire, right? It was the Dior Cruise collection, which was printed in Côte d'Ivoire with Pateo and a collective of designers. And I was like, this is ridiculous, right? Why aren't we, capable of producing the same? And what can we do to go to that level? So I think that on that passion, on that potential, on the opportunity, we're all aligned. And I would love to hear more about the views of the other on that panel. Now, the journey so far and the vision and the way we have structured it. And I think it's really interesting because Roberta and I are coming from different kind of background, but trying to address the same issue. I've been working in the private equity industry for more than a decade. So accelerating companies, investing in them, strengthening their governance, strengthening their capacities, creating value out of funding has always been my signature. Now, I've realized that when you invest in a company, you have two ways to look at it. Either you're like a silent minority investor and you don't do anything and you're just on the passenger seat and wait for the value to be created. Either you roll your sleeves up and really invest in terms of human capital, in terms of connection, in terms of ecosystem. So I was thinking to myself, if it's working in the normal or traditional, ecosystem economy, if this is the way we're actually supporting financially our local and regional champion, then why shouldn't it work in the fashion industry? So, and I think this is really the positioning of Irimian. We are about business of fashion because at the end of the day, to me, fashion is a business, right? And people tend to see it as true, it has a developmental effect. True, it's doing good while doing well. True, it's a way for us to change our narrative, right? At the end of the day, this is just and purely a business opportunity. And we have to make it live and to make it right. So my vision was really to replicate, I would say, that methodology in terms of investment, in terms of creating value, in terms of capacity building into the fashion industry. And then I've realized the key to this is an ecosystem. Because when you look at all the emerging European brands that were successful, they were successful because they had access to an ecosystem. So when you look at Paris, Milan, and all the other fashion places, you have like public organization that is throwing money up to emerging brands. You have experts supporting them, and you have that whole access that is actually pushing brands into their international journey. And today, I think that we have the power to do the same thing because digital is really changing the thing and is changing the business opportunity. Because today our brands are capable of creating interest, intention, and also creating a strong community thanks to the digital network. So I think that in terms of vision and what we're trying to achieve, first of all, identifying the best brands with high potential. And by best brands, it's not a question of looks or fame. It's a question of attitudes. Designers need to have the capabilities to be entrepreneurs. And for us, this is the key. Who are very creative, might have a strong potential locally, but the reality is that they might not be interested in having that entrepreneurial journey because we've been working into the informal sector too. So it's a challenge to take an informal business to a pure formal and profitable business. So the capacity to be entrepreneurs, so selecting designers and brands on that basis, and then strengthening their capacity, giving them access to an ecosystem. Thanks to EFM, we have access to, that ecosystem of the key strategic players into the luxury industry, LVMH, Chanel, and Kering and Bior as donors to the foundation of EFM. And then once we have this, we connect them to distributor, wholesalers, strengthening their production capacities and everything. So I won't say that we have the secret sauce. I won't say that we're having a revolutionary approach. I'm just trying, to adapt the methodology that has been working for a long time into the private sector and into the development of our industry is actually offering the same opportunity if we take it.
Thank you so much, Doreen, for sharing that. And yep, we look forward to the future with platforms like IFAC, AFS, Berimian, and of course, our friends at Fund, who've also, who we've had conversations with in the past, and the focus was on East Africa. And I know that gradually, you're beginning to do quite a bit more. So George, I'm quite eager to hear from you, because through Sunny and with Sunny and through, some of the other engagements we've had, I've had the privilege of knowing, exactly what's going on, the vision, but I'm quite keen to find out where you're at now and what the next decade looks like for you.
Thank you, Omoyemi, and I think what I have to acknowledge really is that that the 21st century really is the century for culture and creative industries. For reasons that were outlined by Roberta, but more so to emphasize that if you look at our demographics, if you look at the growing household income in our countries, and also the growing esteem and the growing sense of belonging, and so to speak, the attitude that Lorraine talked about has been growing. I think a gentleman called Achille Mbembe talked about it as the century for an African renaissance. But at the heart of this renaissance is a galaxy of small entrepreneurs, medium entrepreneurs in cities and towns, in ecosystems across the continent. And the characteristic really is the small and medium enterprise that is driving this cultural production. And if you were to support them and say you're setting up a fund in the continent, and the challenges of an SME will also be the challenges of a fund. And for us as Hiva, we've not been any different from any SME in this continent. So really our growth has been slow and organic and deliberate, just like many of you, just like the history that you share with Roberta, that is the Lagos Fashion Week. And again, in our first iteration of work, this is our first strategy, we wanted to create a methodology. Before ourselves, we didn't have a lot of experience in the ecosystem in either investing in creative industries or moving culture and creative businesses from, say, the hobby business, the small business, to really a large operation that's formalized, that is efficient and competitive, as Lorraine mentioned. And so we wanted to understand deeper the nature of fashion businesses and creative businesses, because we invest in more than 5 value chains, including fashion. We wanted to understand the nature of the entrepreneur. Who is a fashion entrepreneur? What are their characteristics? What is the level of education? What's the kind of investment they are open to? And so we just wanted to understand deeper, and also who is their market. And I guess by understanding that, we were able to experiment with financial models. We created out of the existing market models to customize them really for our industries. In about 5 years, we were able to create tools, financial tools that if deployed together or in isolation, they would address either working capital issues, formalization issues. They would address CapEx issues without risking the cash flow of the businesses, because if you think about the growth of culture and creative businesses and any other small business, they would require numerous rounds of investment so that they can have, I suppose, the kind of cash flow to move from one business cycle to the next as they become more efficient. So we set up an early stage fund, which was our beginning fund. And then we set up another fund that was supposed to support the dynamic ideas that enter the early stage, which was a seed fund. And then we also set up a growth fund. And so we have an ecosystem of tools that are both at model level and also fund ticket models that are able to give both technical support, investment support in both equity, debt, pseudo equity models that all are in this prescription of interventions that help an entrepreneur at one point fulfill an order and pay back quickly. At another point, acquire machinery from India that would have been out of reach. At another point, export a container full of belts and accessories without necessarily taking either participating in shareholding and so on and so forth. So we experimented with all these models. And so now in our second say plan, we are more secure in our knowledge of our ecosystem. We are more secure in our knowledge of our financial innovation, and we have created a whole catalog of businesses that are now ready to move to the next step. So the challenge has always been now to find the capital that is patient enough, that is risk that takes the risk alongside us, and that is there for the longer haul, and is not distracted by the gains in commodities or in real estate and so on and so forth. So we've also been in the business of looking for aligned funds, not just any funds, so that then we can have a sustained investment in culture and creative industries. And so I think what I'm trying to say is our understanding of investment has been born out of deliberate, meticulous, and continuous engagement in direct investments. We've invested in factories that some are successful, some have closed. We've invested in retail brands. We've invested in garment manufacturing, sort of by supply chain. We've invested in platforms that sell fashion. We've invested in different parts of the value chain, and so we now can see the value chain from a bird's eye view. So that's our investment thesis, that we think with a right kind of financial tools that not only look at capital, but look at strategic growth, whether it's legal, whether it's market expansion, whether it's equipment, a right type of finance, aligned finances, sustained engagement, numerous rounds of investment, but also gradual formalization of businesses, whether through vertical integration or horizontal growth, is a formula that seems to make sense in our region. And so when you ask me what is the future of HIVA, I think in the next decade, in this decade, I think we want to take bigger risks. We want to take bigger risks on the value chain. We want to invest in education, and so we want to put some more money in labs, in universities that train our workforce, in actually transforming the skill set, because we've seen those that studied abroad and came back into the continent to create businesses do better in more formalized business than those that are bootstrapping at home. So there's an impact of good technical education, and I think you might have the same experience in your ecosystem. We also realize that people who have a good set of teams, they have their technical department, their finance department, their marketing department, all of them with specialized skills around fashion and fashion business, would do well. And so we want to move money into taking big risks on training, but building institutions. We want to take big risks on stabilizing supply chains. You will realize that fabrics in our region, in our countries, are some of the most governed products. We have all these tariffs around rules of origin. We have all these laws that govern where a zipper can come from and where it can be sold, where the lining of a shirt, what kind of lining you can use if you want to sell to Europe, and what you can use to go to, say, America. And so there has to be also a public sector mediation, so that then we can align as to where the opportunity really is. And so we've really put in some money and some effort and some capacity in working with governments to create favorable business environments that stabilize the operation environment, whether it's export, import, local duties and tariffs, local taxation, and so on and so forth. But most importantly for us, and where we do best, is if we can help our portfolio of businesses, and we are very proud that now we can operate in 14 African countries in the eastern border of the east of the continent, from Djibouti down to Comoros. We can help culture and creative businesses to operate not only in their towns, but in numerous cities across the continent. I'll give you an example. A business that's selling off of Uganda, they can saturate their middle class with one collection in one season. But that same collection can make some good money in Dar es Salaam, in Kigali, in Ethiopia. And all of these cities are an overnight bus away. So if we can find businesses that use our informal distribution models, and eventually they formalize them, they can have a bigger stake in a market that has low barriers of entry, high markups, because the cost of advertising and all these other things are relatively lower as compared to international markets, and so on and so forth. And eventually they can have the confidence to start competing with the Nigerians selling in London, or with the Ethiopians selling in Italy, and so on and so forth. So that's our thesis, and that's our hope, that we can be more courageous, we can move more money into the hands of Black young people who are taking risks in this sector. Thank you.
Talking about risk, thank you so much, George. I'm quite keen as well to speak to Chid, whose approach was quite different and touches on something you were talking about, George, in terms of investing in manufacturing. Chid decided to, invest in manufacturing in Liberia with uniforms, which is something I'm particularly inspired by, because we do something similar here, but not on that scale, Chid. And so we, of course, we're big fans of uniform and the vision for it. So I want, and beyond that, of course, there's also Made in Africa, and we're also aware and conscious of the big move you made recently when it comes to one of the biggest investments in fashion on the continent today, with the Blisco attempted buyout. So can you kindly share your sort of like your wider vision, but starting from, that decision to invest in apparel manufacturing in Ethiopia as a way, of course, of empowering the people socioeconomically, to produce in a way that, of course, can be benchmarked with any standard on the global scene, to be able to export therefore you're also earning, generating revenue for Liberia. And of course, how that all ties into the bigger vision with Made in Africa. Thank you.
Yeah, I mean, I think like everybody else on the panel, Roberta, Laureen, George, I've really, and of course, yourself, Miami, I've really been on a journey with this, and there's no learning like doing. And so at the end of the day, as you are working on things, you have certain insights and you start to realize things. And quite frankly, with starting really as a manufacturer, pure play manufacturer, cut, make, trim, exporting to the US under AGOA, one thing that became clear to me is that, I was coming from tech before that, and tech was a wonderful business because if you got a little bit right, you made a lot of money. And this I felt was a horrible business because if you got everything right, you made a little bit of money. And so I started to say, okay, all these brands that we're manufacturing for, they're the ones actually taking the margin. And in fact, every year they want to come back to me to say, hey, can I get the thing you made me last year for a little bit cheaper? So there's this downward pricing pressure. And so with Uniform, we really decided, or we were actually forced into, we've been talking about it every quarter at a board meeting, maybe we should go into the brands business, potentially. Again, on the impact side, because a lot of our funding comes from impact investors, foundations, DFIs, so on and so forth. So on the impact side, we agree with our original thesis 100%. This is where we create the jobs. Our ability to put, women inside of factories, give them formal employment, paychecks, so on and so forth. That's what we're here to do. But what we're realizing is that if we just rely on trying to make a cheaper T-shirt, as George was saying earlier about the race to the bottom, we're just sort of empowering that race at the end of the day. I'm trying to undercut somebody else's factory in Ghana. They're trying to undercut somebody else's factory in Ethiopia, and so on and so forth. Now, and I truly believe that this is why we have the problem in fashion that we do around unsafe factories and so on and so forth, because you have all these people running businesses that are hungry for orders, hungry for cash so that they can make payroll. And if somebody says, hey, I noticed there's a crack in the wall, or I noticed your fire extinguisher isn't here, as an entrepreneur, sometimes you get caught up with just trying to go. So this downward pricing pressure is a really, really big problem. So we started to say, well, we were hit with our first pandemic, Ebola, our epidemic. And because of that, we had no choice. The factory was closed, our orders dried up, and we said, well, the only thing that we can do is start a brand. And so we started Uniform really as a short-term project. And the idea was, let's help kids go back to school. We have all this fabric here from pants that we were supposed to be making for Hager. Let's just sew them for free and give them away, but we need some way to pay for that. And so we decided to start a brand or a project that would help do that. And of course, it became very successful, got into US retail, so on and so forth. So then we actually said, as we say in Liberia, it became sweet in my mouth. I actually started saying like, oh, maybe I need to be in the brands business. This is actually really interesting. And to be honest with you, it was going out and telling people, some of the best investors, all my Nigerian brothers and their big private equity funds in London, hey, I need $5 million to start this brand. And people like Roberta weren't around at that time. So everybody was saying, 5 million, it's too small. We only do 30, 50, so on and so forth. I don't, fashion, it's risky. Do you have a guaranteed off-taker? Do you have this? Do you have that? And because none of that was really true, again, I was kind of pushed into realizing this big insight, which is one, I would have a much easier time raising a very large amount of money. And two, specifically for Africa, in our context, it's not at all like Silicon Valley where you can just go get small checks until you reach your goal. But two, I needed something that could get those larger investors excited. And so two real key insights came in there. One, of course, was that more of us needed to be in the business of buyouts, and specifically in the fashion industry. Of course, we're playing with it in telecom and in banking and in oil and gas. And, you know, Africans are doing some pretty amazing stuff all over our continent. But we specifically needed to look at buyouts specifically for creative industries, fashion, and so on and so forth. And so I wanted to start to dabble in that. And then second was that I think from all of our programming from childhood, where our parents told us, you know, lawyer, doctor, engineer, that's it, we felt that like we personally undervalued creative industries. It always seemed like, okay, well, you know, every African has this like pipe dream of, oh, I'm really painting, but, you know, I'm an engineer every day. Or so I think we ourselves started to devalue the amazing contribution that we make to the creative space. But what was really clear to me was like Bernard Arnault was not undervaluing it. His biggest brands right now have become Rihanna's brand, Virgil's basically brand. You know, even if you look at Matthew Simpson out of Givenchy, he came out of Kanye and Virgil's school. So he gets that the future is coming out of Black creativity. And here we were sitting on all of this Black creativity, like all of our friends are doing such amazing stuff. And we're like, we don't know. African art is blowing up. We're like, yeah, cool, but we don't know. And so I thought it was just time to get off the fence and go big and say, you know, if Bernard is willing to back these brands with tens of millions of dollars, and if he's backing African and Black diaspora creative directors with tens and tens of $millions, then we need to do the same. We need to find a way to put together hundreds of millions to back African creatives to make a real impact. There's no doubt in my mind that we're impacting every single piece of global culture, film, fashion, name it, music, name it. So why aren't we the ones owning those companies that are benefiting from that? And so this is an ecosystem play. Thank God for George, Roberta, making those investments at the $1 million level, so on and so forth, getting people ready. And then I think at the ecosystem level, we also need to be ready for when those brands are growing to buy in at $30 million, $100 million, $200 million. And so that's what, that sort of has been my growing. Pure play manufacturer, I've literally raised $5.5 million, mostly from American foundations, had good US customers, good business, but noticed that there wasn't something exactly right. Took a little shift, that's still going, no problem with that business, specifically the social impact of it is very beautiful. Took a shift with one brand and saw that I really liked the brand's business. And then in really learning about the brand's business, decided, we have to go big. And our big needs to be able to play with everybody else in the ecosystem. And that's what we're really hoping to accomplish.
Omoyemi, if I may, really, I would really like to, send strong accolades to Roberto, Chid, George, but also Chid on that Blisco actually investment. This is wow, really, this is impressive. For that very simple reason that, we've always backlashed Blisco because we were saying, it's not an African company, it's like a Netherlands company. And today, thanks to this, we have the opportunity to take it back to the continent and to do things differently and make it very instrumental for our industry. So really, well done. I'm impressed.
It hasn't happened yet.
It hasn't happened.
The power of attraction. You have to be positive so that it will happen. Yeah. So you're on that way.
Yeah, but don't worry, Chid. We're rooting. We're all rooting for you, and definitely next time we all convene, it will be to talk about the next, how Blisco is going to change the landscape when it comes to textiles, manufacturing, ownership, and of course materials in a way that's even more sustainable for producing fashion on the continent, considering the number of creatives that do use Lisco or fabrics, or materials that have that semblance. So I'm going to jump real quick to, even though everyone's touched on this in a way, what is your approach to financing creative? I think in sharing your vision, you've all touched on this, but I think I want like short burst answers. So starting with you, Lauren, because I'm looking at you right here on my screen. So what would you advise, long-term investments or short-term investments? Bearing in mind the understanding you have about, creative on the continent today, what would you advise if you were not sitting there, if you were sitting in their shoes, what would you advise them to do?
No, I mean, I think definitely long-term, and like putting myself into their shoes. I mean, when it comes to investment, private investment, especially private equity, the most difficult part of an investment is actually the exits. And having done that for I don't know how many years in, again, the mainstream industry, when you exit, actually it's a divorce, right? Call it the way you want. You're actually divorcing, and you can sometimes destroy value. So that's the reason why, I mean, as Birimian, we're not set up as a fund, because from our perspective, I thought that there was no secondary buyout to exit. I mean, there was no secondary market to exit, and I didn't know what kind of investor would actually buy, and also what would be the kind of leapfrogging you can actually sell. And I didn't want to put any kind of pressure on those brands to deliver those kind of returns, because I mean, it's very difficult. And when you also look at the currency risk, I mean, even if those brands sell through digital, at the end of the day, they're based in Lagos, in Accra, in Abidjan. So you have a huge currency risk that can actually destroy your return on investment. So I was like, I cannot go that route. Let's do it differently. So this is where, I mean, our approach is really long-term. We don't invest to exit. We're here to stay in the long run. We're offering exit opportunity differently to our investors. But we have made clear at Birimian that by no means and way we will sell our stakes in our brands. So in the brands we're investing. So the way we do it differently, so we invest either in convertible, and I think this is the same for George and Roberta. So in convertible instruments, the objective is to start a relationship, to be very pragmatical, to finance production, e-shop strengthening, any kind of needs that the brand and designer might need. And I think what is really important is also to pace those investments, because in terms of absorption, sometimes they might not be ready. So you need to pace the way at which you disburse. We put in place some strong monitoring in terms of finance, in terms of administration. So we're supporting brands to have some ERP dedicated to the fashion industry, so that we can monitor the stock, we can monitor the sales, the revenues, and actually help the designers to follow its financial performances based on a business plan that we'll have agreed on. So first kind of investment. And second is actually more classical, so taking some kind of minority stakes in brands. It's it's a longer discussion, because we need to build trust and confidence, but our approach is definitely long run. I would say that to the difference of EVAFN and maybe EFAC, because maybe to make it clear to the different people listening to that panel, we focus actually on the fashion industry, cosmetics, consumer goods per se, but we only invest, for example, in production units. So our choice was really to stay focused on the fashion and luxury consumer good ecosystem. So that's your approach. I think what is really, really interesting is George's approach on financing the whole value chain. So not only designers, but also production units, manufacturers and everything. So to us, I think it's a great positioning, the ones of the EVAFN and IFAC, and also of SHID initiative, because they're all complementary. And at the end of the day, the objective is really to support an industry. So I would say
that's why we brought you together.
Yeah, it might not be enough, right? Because there are so many needs. But what is really great about that panel, and thank you, Mayumi, it's the great complementarity of what we're doing all. Yeah.
So, Chid, I'm going to ask you this question because you touched on grants one or two times, and then I know there's a different approach, of course, with Made in Africa and the SPV you're probably using for Blisco. So, what do you think for a creative? Debt, equity, or grant?
It all just depends on the stage of your business or project. You know, when we started pretty much with all equity. And when I say when we started with Liberty and Justice, I don't even think we did, you know, convertible notes in our first round, which is the standard now, I think, in Silicon Valley. We really just went and raised a real equity seed round, which is almost never done. Very bizarre. And I think in that process, we kept hearing from people that would come visit us in Liberia. Hey, I don't understand. I don't think you understand Africa yet. And they're true. I've been out of Africa for 28 years. So they kept saying, I don't really think you understand the environment. You know, you're leaving money on the table. And so we actually went and we started a side-by-side nonprofit whose sole purpose was basically to support the infrastructure of our for-profit. Sorry, IRS, but we found a way to make it all work. And so then people started making grants side by side to our nonprofit and our for-profit. And though I loved the financial engineering of this setup, what I found personally as the entrepreneur was that it became very hard to manage I was managing two sets of investors, financial parties, and managing two boards of directors. And I don't really, like one board is enough for me. Let's just put it that way. That was okay. So we really moved on from using too many grants. But one thing that we did use was, again, and I'm giving something for those coming from the American context, foundations doing what are called program-related investments. And this, I think, for anybody working, you don't even need to be American or have ties to America, but the rule for US foundations is that they can invest money in equity and debts as long as it meets a higher risk than the market rate risk or a lower return than a market return. And for them, it's out of the 5% of money that they have to give away every year. And for them, it counts as a grant. So somebody could invest $1 million in equity. And as long as it meets this criteria, it actually counts as a grant. So a lot of foundations actually made these program-related investments in us, like as we got to our Series A round. And so though it was technically equity, to the foundation, it was just the same as giving a grant. That the IRS treated it the same. You know, when we gave the money back, they had to go into more social programs and stuff like that. But that was really it. And then I would say we went all the way and grew enough where we actually needed debt financing to support things like capital investments, and working capital. So, you know, that's happening at the same time. And then you get really mature where you start doing a leverage buyout where you're mixing, you know, equity, mezzanine financing, and senior debt to actually do a buyout. So I think it just all depends on your phase. You know, early on, I don't want you to become too distracted, but absolutely, if there's grant opportunities, take them. Free money is free money. That's a smart idea. I think everybody always said to me, and this is a line I actually learned from one of my favorite investors. He said, be really innovative in your business. You don't need to be innovative in how you finance your business. So, you know, start early days grants, do an early seed round, convertible note, safe note, something like that. Start doing priced equity, start building a banking relationship for working capital and CapEx, and then do something bigger. I think that's the natural evolution.
Thank you so much for sharing that perspective. We and for representing the voice of the entrepreneurs on this panel. Roberta, I think we'd love to hear from you, bearing in mind, you know, the way your structure is. So maybe if you tell us a bit about that structure and what you think your approach to financing is for creatives and how you feel that's beneficial.
Okay, so thank you, Amoyemi. So the Impact Fund for African Creators, even though it's a fund structure, we also operate as an investment holdings company. Just as explained earlier by Lauren, the creative and culture industries is quite unique in the sense that it needs long-term patient capital. So it's really difficult to, and then also looking at the private equity space and the kind of ticket sizes that private equity is doing, and the lack of, I think, the maturity in the capital markets in Africa. It's quite in its nascent stage, so there are no exits. So we decided to take an approach of really putting in patient capital and being a long-term investor. In addition to that, we are also very much involved in the business. So we are not arm's length investors. So we don't just put money and then leave. We actually invest. We sit on the company's board. In some cases, we help bring infrastructure to the businesses in terms of hiring management team, because a lot of the businesses may not necessarily have the infrastructure to be able to utilize the funding in a way for us to have a return on investment. And I think the issue with me is that because I've also been involved in a foundation, that was mine and funded by myself, there's often like the confusion that, IFAC is also going to follow suit. But we do have a 5-member investment committee that are made up of people with private equity experience, and also legal and also strong kind of ESG investors. So the deals come through us. AFF serves as an aggregator. We have also the opportunity to have partnerships with platforms, that would also bring us, the pipeline or the opportunities. Then these opportunities are really, really based on the initial criteria that we put out there. The investment committee makes those investment decisions before, money is actually deployed. But I think sometimes creatives get confused, or fashion designers, because they think, okay, if I can just give us money because it's the same person who was involved in AFF, but they're very different in terms of, and we've taken a blended approach. So when people hear 100 million euros, they're like, how are you going to deploy 250 to 2 million into creative businesses? That means you're going to have a pipeline or businesses, not a pipeline, portfolio businesses of about 50, and the management of that will be a huge hurdle. But in fact, what we are is a blended fund, right? So we have technical assistance, which is grants, piece, which is, so between the 100 million, if you look at it, we have 20% of it is technical assistance, 30% is equity, and 60%, 50% is debt, right? So we've divided it into that. So there's a debt component, and we are still kind of defining the strategy for the debt. We're not most likely not going to deploy all the debt by ourselves, but we'll work with a banking institution or an established institution that has the track record and the infrastructure to be able to look at the recovery of the debt, because that's also another hurdle that we don't want. I know, Hiva Fund, we need to have a conversation. But yeah, so my thing is and then even in terms of, so that's why I'm saying this is a great panel, because I see a lot of allies here and partners. This industry is huge. I believe that the potential is in the billions. And even if you look at what is happening and connecting the creative industries of the continent to the diaspora, look, in the diaspora, we're leading this, man. So why can't we bring those resources to the continent and build and drive the prosperity and growth of our continent ourselves? We are all allies here, and we are all players in this, that we can all come together and work, because we're working in silos. And that is the problem we have in this industry. We need to really come together as a unit, to be able to solve the challenges that we have, to be able to direct our own narrative and direct affairs the way that we want to see the future for. I'm a mother, I have a 10-year-old, I need to shape this up for his future, for the next generation. So there's so many things that, there's so many things that are actually driving me to do this. I see IFAC as a platform that is not just about Roberta Annan, but really about the African continent, African youth, African women, all coming together to really drive the growth and prosperity of this continent. And then one last thing is, at our launch in Paris on October 4th, we had the African Development Bank joining us to celebrate the launch of IFAC, we unveiled the 3 first investments that IFAC have made: one in fashion, one in a beauty brand, and one in what I call an aggregator of creative businesses. It's going to have a blend of music, film, fashion, art into one creative space, which is going to be a Pan-African venture. And it was really interesting to see that development banks are also seeing the creative industry as a tool for sustainable development. This is something
wait, that's the next question, Roberta.
So I was just announcing that we've also been allocated as the only creative platform, a boardroom within the African Investment Forum, because now the development players are also seeing the importance of this industry. So I'll land there.
Okay, thank you. We'll come back to that shortly on the role of banks. While George tells us, their approach. I mean, you've pretty much touched on it a few times, but if there's anything else you want to add to this, please go ahead and share with us before we go to the next thing. And while we're talking, please, you can start. I see a few questions in the Q&A chat box. Please add more questions that you have for our esteemed guests. Grill them while you can, because the next time you approach them, you're going to be talking numbers. So I think it's a good time to ask questions if you have them. Thank you.
Well, thank you, Moyemi and my colleagues. So I won't quite emphasize on what has been said. I'd say 3 things. The first thing is capital is capital. Money does what money does when fed into an entrepreneur's ecosystem. So what we acknowledge, though, is that there are different vernaculars of money, and you have to have the competence to understand the specific vernacular. So that means we do not discriminate grant money for private equity money or American dollars from European euros. What I'd say, though, the vernaculars of money are important to understand, and the histories of this money, because they come with different expectations and they require different competence to handle, and not just competence, but a level of sophistication. A lot of culture and creative industry businesses are not as sophisticated because they haven't interacted with commercial capital for long. If you go to tech, for example, tech is fed directly from international capital, so to speak. So tech has a sophistication around structuring, around presentation, around pitching, around series, this and that. And that is not a competence that easily is available in the culture and creative industries. And so what I start to realize that if then you have you are looking for, say, American capital, there has to be an education to access that kind of money. There's the language, there is the sensibility, there's the tax frameworks, and it helps that there are people like Roberta, myself, and Lorraine who are intermediaries who translate this sophistication, and that our businesses do not have to invest in a French sensibility or a British sensibility or an American sensibility to access FDI. So in essence, as an intermediary, we have built a capacity to handle different types of capital. We handle debt capital. It takes more than 70% of our capital outlay, and we realized that we found it easier to raise debt capital than any other type of capital because of where we are situated in the continent, the kind of money that goes there, and the kind of interest that goes there. And so if you find the grants money that's available in our side of the continent, there are small tickets that have such high expectations on return and very short period of burning. So you have to have very small little burn little bushfires, so to speak, and we find that has a type of an effect in the ecosystem. And so what we do is that we pair different types of vernaculars of money to achieve a blended product for our client. So, for instance, we've taken debt from the French government, and we've taken, say, technical support grants from the British government. Then that allows us to not pass on the full cost of the investment to our beneficiary in the first few rounds before they mature enough to be able to take the full cost of capital. So it is in my interest eventually to meet people who give free money without the coupons, but I have not met these people, and I've been in the market for quite a bit, and I hope one of you will meet them. And if you do, please share some of the spoils. Because we need them. But I would like to say that
please make them flow our way, you know.
Yes. Maybe Roberta has met this kind of capital, but the kind of capital that we have received or that we have been able to capture is the kind of capital that has a price coupon, that has a timeline, sort of a horizon. And these are the kind of limitations that affect or influence the type of products we create. I'll give you an example. We have a 10-year debt structure that finances a big part of our capital, which means that if we were to look at equity investments using this facility, the equity investment must meet the capital and the risk, but also return within the legroom that we have. So the type of capital you receive definitely has an influence on the kind of facilities we would have. So we would want to have more equity positions like Lorraine, but our capital is such that until we get capital that has longer leg room, we are not able to participate as deeply and as efficiently as Lorraine does. But what we have, though, is that we have different types of facilities of different ticket sizes that will allow our entrepreneurs to sprint. So that one entrepreneur can come to Hiva and get, say, $300,000 in different structures, say $100,000 in short-term financing to meet your orders, say LPOs. You'll get 200,000 in leases, so that you can be able to lease your equipment and it doesn't hit your working capital, your investment so hard. So, and then you can take this in numerous rounds in the life of your business, which allows us to meet our coupons, our back-end investors, but also give you numerous lines of credit whenever you need it. And some people we've been able to give recoupable grants, especially when these are the lower end ticket sizes for very dynamic and experimental businesses, and with non-compete clause where, with the right of first refusal, where we secure future business, so that then if you get free money from us or zero coupon type of money, then in the future you'll be able to help us offload the other type of capital that we have. But it is my interest that in the next decade or in the next 2 decades, that we start to build local financing mechanisms that keep the capital at home, that have the returns stay at home, that the beneficiaries of this money are businesses in the continent, and so that then, as much as our creative industry practitioners work hard to pay back their investments to Hiva, that Hiva doesn't pay back its investment really to Europe, and that we continue having dry wells in our backyards, so that then we can always have resources at home, and that those resources would come with fewer restrictions, so that if I meet a company like Pedro Ogogoro sellers in Lagos, I can move the capital, but the French have told me I cannot invest in liquor. But we think that liquor is a culture and creative product off of our
That's
heritage.
what they call the blacklist. The
Yes,
famous blacklist, so you can't even invest in your local production to make some amazing goods because of the gray and blacklist. I agree. This is complicated.
Yes. So thank you for saying that, and I'm very, very optimistic that in the next decade, we will talk to our own billionaires, our own philanthropists, our own. We put in our own money, so that then we can have capital that can actually take risk, and take significant risk in our own
ecosystems and industries.
Yes, thank you.
And that is the future, when our own people, when they're investing, then we're able to address questions and conversations around restrictions, on who to invest. I mean, some even come with restrictions around, nope, Nigerians can be beneficiaries of this grant. Nigeria is always exempted from a lot of these, opportunities. So I do understand. So I just want to drive us real quick into this. I think this is probably going to be the last question because we've touched significantly on what's next. And that's the role of commercial and development banks in this conversation that we're having today. Roberta, I know you started talking about it when I said, just wait a second. So maybe you want to, tell us a bit more about, what you're doing in that regard. And of course, I'm sure Chid, everyone here, based on the work I know, maybe, I'm not quite familiar with Laureen and Beremy, and I think you've invariably interfaced with development banks on the continent. So it'd be great to touch on that, and maybe you want to share your experience with us. Thank you. Roberta, you're on mute. Okay.
Sorry. Okay, so yeah, because you see the approach for me has been on around sustainable development, right? So I saw this, I would say this vision 10 years ago when I was first introduced to the creative and culture industries, because I saw that at that time we had a very young population, and there were issues of cultural appropriation and taking and imperialism and taking our identity and heritage into new markets and polishing that and selling that back to us. And it was not even just around fashion, it was around so many things, like cocoa to chocolate and all of that. I don't want even to get into that rhetoric. But my thing was that I wanted to create an opportunity or an avenue to really add value to what we have naturally. And to me, the creative economy, it's like our creativity and innovation. And I see that now the development finance institutions, especially, like the players like African Development Bank, the European Union, they're all seeing the opportunity that the creative economy has, right? This year is the International Year for the Creative Economy for Sustainable Development. And I'm also serving as a United Nations Environment Program Goodwill Ambassador for the Creative Economy. So we launched the year this year with UNCTAD and the government of Abu Dhabi and some other significant players, because now they're positioning the creative space. And the role that I think banks, let me talk about development finance banks, because I'm not sure if African banks are still ready for the creative space. Because although they say that they have specific programs for creatives, it's still very difficult as a creative to access loans. They still ask for collateral. They still ask for so many things that creative businesses lack. So definitely cannot access those type of funds. And I think development finance is now, capturing the opportunity, that this great, I would say, demographic of young people, and using this creativity as a tool to divert all of that into creating young entrepreneurs, that could become the future billionaires of the continent. So at the African Development Bank, I know that they have a platform called Fashionomics. You alluded to that in your earlier conversation, Omoyemi. There's also a European Union, the DevCo platform called Creatify. I believe George and I know them very well. It's a platform which is like a fund of funds for creative industries, started with 20 million. And that was basically a platform that linked into 3 major DFIs, Corpaco, KFW, and African Development Bank. But what has happened this year, and I'm not sure I think so many things have kind of, propelled us to this stage, right? One of them could be things like Black Lives Matters, where people are now becoming more sensitive, about the question about identity and culture, which is also pushing a lot of banks and investors to start looking at how to support the creativity that is coming from Blacks, not even just Africans on the continent, but also those in the diaspora, and how we can really expand and capture the investment potential in that. So a lot of investors are making significant strides to really to support Black creatives. So that's one. And I think the COVID pandemic also helped. And I say why. I mean, COVID has been a disaster. But I think some of the positive things that came out of it was that it allowed the whole world to press the pause, like kind of the restart button and recalibrate how we do things. Government started rethinking. And I'll tell you one thing, because I remember our finance minister in Ghana, when he put Ghana under lockdown for 3 weeks, he could not extend the lockdown after that, because you know what they realized? That the economies of these countries are being driven by the informal sector. And a lot of the creative businesses are in the informal sector. So we are important, when it comes to contribution to GDP. So now all of a sudden, governments are now seeing the seriousness about these subsectors. And the African Development Bank, for the first time in history, they are giving a platform for creative and culture industries to be seen and to be matched. Because I don't know if you know about this African Investment Forum, which is a platform of 8 banks, which is African Development Bank, Afri-Exim Bank, DBSA, and a few TDB, and a few that I cannot mention here. I don't remember the names off the top of my head. But they've all come together and have allowed for creatives to, be matched with investors at the AIF this year. And the senior director of AIF, Chinelo Anoho, was with me in Paris to launch IFAC. And we were in serious discussions to have a boardroom. And just a few days ago, I got the good news that IFAC is going to have a boardroom. So that means that just like they're looking at infrastructure, the importance of infrastructure, agriculture, and renewable energy and other sectors, development banks are now seriously looking at the creative and culture industries. And so this is really good news for us. And this is why I love to also use this opportunity to congratulate each and every one of you here for what you're doing and your contribution to this, because we cannot work in silos. We have to work together. I think it's great that you brought us together as Lagos Fashion Week to really talk about what we're doing. But I think this conversation should extend beyond this platform, and to have a way in which we can share ideas, best practices, lesson learned. It's not an easy asset class to present to investors. I've been in the investment advisory business since I left the United Nations. I've worked with the richest people on this planet, and they don't want to take a risk on creatives. But now things are changing. And I think with all the experiences that we have here on this panel, that we have an opportunity and a platform to convince people to put their money where their mouth is, to convince governments to also support us, on the policy side of things. Like if you're investing, how are you going to address things like secondhand clothing, right? Because if you want to build a local industry, and we're bringing in billions of dollars on a yearly basis of secondhand clothing, how are we going to support the local industry? So policymakers need to be in the room with us. And, so I'll land there because I know I can get very passionate and go topic. But thank you so much.
It's interesting that you touched on that, on the secondhand, influx of secondhand goods. That was like the focus of a conversation I was having with Ellen MacArthur Foundation this morning. Like, of course, it's a huge problem on the continent, you know, when it comes to, and of course, how are we going to solve it, policies and solutions and all of that. Laureen, I'm quite keen to find out what you think when it comes to commercial and development banks, considering your background. You know, you were one of them. So now that you've crossed over to the dark side, it would be quite interesting if you can share your perspective a bit on their role.
Yeah, no, thank you. It is very interesting because I'm actually part of different boards of AFD, Proparco, and a lot of development financial institutions trying to find the right approach. And I think Roberta is right in the sense that it's very difficult for them to find the good way to finance it. And when I was, for example, at Proparco, every time we wanted to address an industry, we were working with banks with dedicated facilities. So agribusiness dedicated facilities, environmental and social dedicated facilities dedicated to women. At the end of the day, these are still loans, right? With guarantees or with payback and with everything. So we're not saying that our creative industry needs charity. This is not what this is about. We're just saying that we need to find the right approach when it comes to return and profits and time. So, for example, Proparco created a fund called FISEA, which is a fund dedicated to investment opportunity with a high risk and a low return. So a strong developmental angle. And I'm on board of that fund. And I think this is the first step to try to reach the right model, but it will take time. So as far as we're concerned, for example, we don't have any single institutional investor in our shareholder base because I knew it would be too complicated to convince them on the investment thesis. Now, and this is where the likes of IFACs and EVA fund are very important because they're what will actually enable maybe those actors to change and see it differently. So I'm an optimistic by nature. I think it will come, but for it to come, we need to give some track record. So as the Birimian, as the EVA fund, as the IFAC fund needs to show that we can actually invest money in that industry. Once we would have done it properly with some strong, and positive and concrete track record, I think they will just flow and pour in. So this is where we're actually visionaries. And this is why we have a lot of pressure because we can't make this wrong for the interest of the cause.
Thank you very much. Chid and George, do you want to add to that before we round up with big data, technology, and the role that it's playing today? I think Laureen touched on that a bit at the beginning when she talked about the need for us to tap into the digital space. Chid, George, what are your thoughts?
George, do you have anything to add? I think Roberta and Laureen said everything, but yeah, I'll let George add.
Well, I just think, thank you, Chid and Moyemi. Role of development institutions is to soften capital and to take risk on behalf of. Commercial capital is available. I've been in numerous conversations with banks, from the Afro-Exim banks to the Kenya Commercial Bank, which is a smaller bank in comparison. And we've seen Afro-Exim launched $500 million facility, I think a year and a half ago. But I haven't seen any movement of that cash. Why? The question is that there is a lack of translation between the ambition of capital and the use of capital. Where they read risk, we read lack of information and innovation. Where they read lack of capital, security, we read I guess a misalignment, because culture and creative industries are one of the few industries that create intellectual property, and that can be mobilized as collateral. So there's a dialogue that's not happening, and so culture and so development banks primarily should take the risk from commercial capital, should leverage their money through, say, local banks, so that there can be enough resources in the ecosystem so that most of our small businesses, which are mostly creative businesses, can get some sugar. The second role that they can play is validation. They've validated agriculture. A farmer who relies on rain and seasons is able to get insurance, is able to get credit based on their production output, is able to get is able to leverage their assets. But the culture and creative industries, which is even more sophisticated than farming, is unable to get any of these things. You can't take a loan based on your cameras or your inventory as a filmmaker, but the farmer can take loans based on their cows. So there has to be their role in educating commercial sector through, say, technical assistance, guarantee schemes, research facilities, and all these things, so that in the next decade, culture and creative industries will be mainstream. And so when they are mainstream, the roles of George Gashara, it's not in my interest to become a bank. I don't want to run HIVA to become the biggest credit mechanism. HIVA has better roles to play because banks have the mechanism to do retail loaning. So my role right now in the ecosystem is to help the sector sophisticate, so then I can play more specialized roles in my subsequent growth cycles. So development banks are critical to take risk, to reduce costs, to increase learning, cross-sectoral learning, and to help creative and culture industries become mainstream. That's what I would say.
Thank you so much, George. I'm going to try to wrap this up now so that we don't take any more of your time. You've spent so much time with us today. Thank you. So does anyone have any questions to ask? I see a couple of questions in the chat box. One is directed, okay, it's for you, Lorraine. Coming from the investor end, what would Lorraine consider as key indicators for a successful fashion brand? What should a long-term financier look out for? So it's a two-pronged, two-in-one question, two-in-one.
Yeah, no, very interesting question. Actually, what we tend to look at is the profitability of a collection by opposition of the profitability of the brand as a company. Because most of the time, the operation are not structured for it to be totally profitable, but it's very interesting to see how profitable can a collection be. So the first KPI is the margin on a specific collection. The production cost, obviously, because it's the basis of the business model, and we tend to see brands, because they want to have that high luxury, positioning, they produce internationally with high production costs, and in the end they have low margin. And it's what we call in French hamster effect. Like you're running, and you'll never go back to your margin because your positioning was not the right one. So brand positioning, collection profitability. One thing that is really, really, really key, and unfortunately it cannot be measured by KPIs, is what we call the brand platform. Because we also tend to see a lot of brands who are telling us, okay, our USP, our positioning is to dress the powerful African woman. And we're like, okay, but this is not a brand platform. What's your DNA? What's your heritage? What makes you different from another, African brand dressing powerful African women? So, and I think this is actually key, because if a brand get this wrong, the international expansion will be jeopardized and will be a critical challenge. Because at the end of the day, we don't want to put African brands in competition between themselves. So, and since the market that we're addressing at the international level, is limited, we need to educate that market. So we want to make sure that from the very beginning and from the very great start, that brand platform, that unicity, that identity is really clear and strengthened. And we don't move financially until we have insurance that this is clear, and this will be the basis of a strong storytelling. Then in terms of what we're looking next, so in terms of the community, and I would say the stickiness of that community, so social networks, we use some software to identify the different kind of, regional communities into that community, whether it's UK diaspora, French diaspora, or the continent, or which kind of country. And what is really important for us is how that community grows outside the motherland, so the main market, whether it's Nigeria for a brand, Ghana, and so on and so forth. And then the evolution, that's at the second step of the number of orders and the number of returns when it goes to the e-shop. So it depends, and I cannot answer that question very simply, because again, our approach is not profit maximizing immediately. It takes time. Building a brand is about DNA. It's about heritage, so it takes time. So we're actually looking at the, I would say, expansion of the business as a brand and the expansion of the related community it creates, which will define the capacity of such brand and designer to integrate international ecosystem from a sustainable basis.
So thank you very much, Lorraine. I think, some of these questions are, I think there's one for Roberta. The easier way to do this might be if people can reach you. Do you want to pop your maybe email address in the box so they can reach out to you, so we don't take any more of your time, for example?
Yes, definitely.
And then we can round up with, is there anything, any, wise word you want to leave us with before we round up the session today? So yay. Okay, great. Thanks, George. George has popped his Twitter, Roberta's email, so you can reach out. So we don't keep them further. We've been here for almost 2 hours. Sorry, Chid, I know it was super early. If you're in New York, it must have, we dragged you out of bed, literally. So we really appreciate this.
100%. My dog really needs to go out, but that's about it.
Okay. So thank you so much for joining us today. If there's anything you want to share with us as a parting sentence, on financing fashion on the continent and where you think the future is, which you've shared with us, but if there's anything you want to leave us with today, we'll appreciate it as we wrap this up in 5 minutes.
Yeah, I'll start. Oh, sorry. No, Laurie, no.
I'll just pick one very interesting question, which is the difference between French-speaking country and English-speaking country. And again, this is the same goes into the mainstream business. We tend to see, from where we sit in Côte d'Ivoire. Like you people in Lagos, we are very admirative of you. To us, Lagos is just an amazing, very vibrant, city in the continent. And, Abidjan is like Geneva, right? Very calm, not with that kind of energy. So in the end, when we look at the fashion industry, it's the same. I would say that the Anglophone countries tends to have like a stronger ecosystem, with the implication, even if you might it not to be efficient, but the implication of local public authorities. So when we look, for example, at you, Omoyemi, what you've been able to achieve and do with Lagos Fashion Week is just incredible, right? And it's at the forefront of the whole region. We don't have this in Abidjan, not yet. We hope to have it, but we're like really miles behind. And we will actually benefit from your experience, your expertise to make it happen here. So this is where, not really touching on why are those differences possible, how can we make them impossible, right? So how can we work together with Lagos, Johannesburg, and all those countries to really also flip the francophone country? And every time I discuss this with our partners, whether it's in Paris or London, what they're saying is, your continent seems to be very disorganized from a fashion, ecosystem. We have Lagos, then Johannesburg, then Cape Town, then blah, blah, blah. So, how do you see some coordination in this? And I think this is also where, coming back to Roberta's point, we need to be united and to show the right way. So there shouldn't be any division between Francophone and Anglophone. We should make sure that as a whole, the whole African creative exception is actually growing in the right direction with different kind of poles and cities to showcase a particular angle of it and attract some particular actors. This is how we will make the industry grow. So this is just what the final comment I wanted to share. Thanks, Emoyemi.
Thank you very much. Any other person wants to add to this? Or is it a wrap?
Yeah.
Okay, it's a wrap. Thank you so much, Chid. Thank you, Roberta. Thank you, Laureen. Thank you, George. And we hope this is not the end. We look forward to, what's next in terms of what you guys are going to sort of serve us next, either working together on a project or you're going to say, Roberta.
Oh,
we can hear you.
The internet connection is not that great on my side, but I was saying that we'll be extending an invitation to you. We have an industry retreat we do every year around African Union Day in Accra, and we'll be sending you invitations. So hope you can make it. And that will be another opportunity for us to put our heads together on how to move this industry forward.
Thank you. Thanks, Roberta. Thank you so much, everyone.
And thank you, Emoyemi, for bringing us together, and all the best with the rest of the sessions, the Lagos Fashion Week.
Thank you.
Thank you,
All the
Emoyemi.
best. Thank you.
All right, take care.
Next steps.
Bye.
Bye.